Hi guys, welcome back to the channel. On this channel, I've done many videos. I think I've done a lot of videos on trading synthetic indices. I also shown you how to trade forex indices and stuff like that. So in this video, I'm just going to share with you some do's and don'ts when it comes to managing a risk in trading, whether you are trading synthetic indices, whether you are trading forex, whether you are trading indices, whatever you are trading, there are some do's and don'ts when it comes to managing your risk. Follow them and you find that you last longer in this trading game. If you don't follow them well, you follow them at the peril of your account. You follow them and risk your whole account. So what are the do's and don'ts when it comes to managing risk in trading? Because that's what you want to be. Before you think about making money in trading, before you think about the money that you stand to gain, what you want to think about when you're approaching the market is you are a risk manager first. Be a risk manager first before you think about making money in trading. Be a risk manager first. So, what are some of the do's and don'ts when it comes to managing a risk in trading? Trading your forex, your crypto, your synthetic indices, your stocks, whatever that you are trading. Always know what you stand to lose. Many people, you'll be surprised, they've got no clue of what they stand to lose if things don't go their way, things go against them. They just go onto their charts and they just take trades. They just take positions. They are just taking positions. They don't even know what they stand to lose if things don't go their way. It's very important that before you do anything, understand the lot sizing that you are using, your margin, understand the capital that's in your account, understand how much money you stand to lose if that position does not go your way. That's the first thing that you need to be thinking about, not thinking about how much you stand to gain. That's how you're going to approach the market as a risk manager. Two, this is a common mistake that people make. Never, ever, ever remove or adjust your stop loss. Of course, some people trade without stop loss. Of course, some people love to trade without stop loss. We are not going to go into that today. But you need, before you take any trade, you need to understand where you are getting in and where you are going to get out if things don't go your way, and where you are going to get out when things go your way, also known as a take profit. Now, here's the mistake that people make when things start going against them. That's when they start adjusting their stop loss. They start moving it further away from the price because they are hoping and praying that at some point the market is going to turn in their favor. And lo and behold, most of the time it doesn't. And you end up losing more money than you should have lost. So never ever remove or adjust your stop. You need to determine your stop before you make that trade. Let it be an amount that you are comfortable losing if things don't go your way. People start adjusting their stop losses and stuff because they realize they've risked too much in their position. Now they stand to lose a lot more than they are willing to lose. Now they start shifting or removing their stop loss altogether because they are hoping that it's going to go and turn in their favor because they've over risked in the position that they took. Number three, cut your losers early and let your winners run. Never ever let losing trade run for longer than it should. Again, you find that people are comfortable. The moment they see a blue on their chart, they close the trade. But when they are in a losing trade, they are prepared to hold that losing trade for days. It doesn't make sense. What you want to do is cut those losses early, and you'll find that you might have 5 losses that you cut off early, but that one winning trade that you are going to let it run, it's going to cover all those losing trades. So learn to cut your losses early at that stop loss. Let that stop loss get a hit and move on, find something else, find another opportunity. When it's winning, let it run, let it go, let it do its thing. Don't just, the moment you see some blues, you get excited and you are afraid of seeing that blue turn into another red and you quickly close it. Number 4, monitor your drawdown. Monitor your drawdown. Ignoring drawdown and other important risks metrics is one of those things that will land you into trouble. It's important that you understand your drawdown, understand the margin that you still have, understand the amount of money that you are still willing to risk or to lose. Monitor that drawdown. If your account cannot handle that kind of drawdown, why are you keeping that trade open? It's just going to blow your account. That's what's going to happen. That trade is just going to come in and blow your account. So understand your drawdown, understand the margin that you still have with that account. Those are some do's and don'ts that you need to be aware of when you are managing your risk in trading. When it comes to trading, those are some quick do's and don'ts that you need to understand as a person. Beginning of the video, I said before you think about making money, understand that you are a risk manager. You are a risk manager before you think about making money in trading. Be a risk manager. That's how you're going to protect your account. That's how you're going to last longer in the game. Because opportunities are always going to be there in the market. Opportunities are always going to be there in the market. But are you going to be there in the market the next day? Subscribe if you're not yet subscribed. Like this video, share it with your friends, leave your comments in the comment section below. I'll see you in the next videos.